Hi, both of you. I think we have a very important guest joining us. Mr. S.S. Mundra, the Deputy Governor of the Reserve Bank of India, is with us. Mr. Mundra, thank you very much for sparing time for us today, sir. Well, first up, the big news that's come from the Reserve Bank is that loans or overdrafts given to Jan Dhan accounts will now count as priority sector. Are there any other changes to the priority sector category that we should expect?
See, there are two things to it. Let me clarify. As far as the overdraft as it is envisaged in Jan Dhan, which has a upper limit of up to 5,000 depending on the credit history and all that. Within the existing category of Reserve Bank of India, these kind of overdrafts are already, they are eligible to be classified as priority sector, which has a linkage to the annual income of the particular household which is availing this overdraft. So this is a continuity of existing guideline. This is what we have clarified and it has been further reinforced. So that is the Jan Dhan overdraft. As far as the overall priority sector classification and guidelines they are concerned, as you are aware that Reserve Bank of India had formed a working group. This working group has finalized its report. It was put for a consultation as well, and presently it is under discussion with the Government of India, and so is a work in progress.
Okay. But is the main change that foreign banks on foreign banks' responsibilities towards priority sector, or will there be other changes as well?
As I said, the guidelines were put on that, and there could be few related areas.
Okay. Okay. Mr. Mundra, thank you very much for joining in. I had a question with regards to, the possibility of capitalization for PSU banks that we could see in the budget. Do you think that maybe the government could now shift towards performance-based capitalization or recapitalization for PSU banks? Something that we just saw happen a couple of days ago based on our return on asset ratios?
Well, of course, I mean to say we would have budget in a couple of days with us, and we'll get to know what allocation is coming for the public sector bank. But based on the announcement which was done say few days back, and where certain capital allocation was indicated that to a limited number of banks in the public sector, to my mind, at this point of time, to restrict the allocation only to a few banks and to leave the other banks out of this thing, at the time may not be very appropriate. That is what I feel is a thought in right direction. But to my belief, it should be more a roadmap where certain, the performance indicator can be indicated, a timeline may be given, a roadmap may be given, and maybe over a period of 2 years, 3 years, whatever it is, those should be the benchmark which may decide the distribution of capital. But having realized, having taken a cognizance of what the banking sector has gone through in past 2-3 years, what had been the contributory factors, where there were equal number of external contributory factors to the position where they are having today. So to deprive them of capital at this point of time, I think would only aggravate the problem and would also have the implication on the growth. And as we know that few challenges which they are facing at this point of time can be managed if they are able to maintain a growth momentum in coming point of time.
Okay, so just hold on to that thought. We are getting some very important headlines from S&P. It's raising the GDP forecast to 7.6% for FY16 and 8.2% for FY17. I do not know whether this is only to be in line with the new forecasts for FY15 put out by...
That's the new methodology. That's what the ticker is saying, Lata.
Okay, so that's clear over there. It's because of the methodology. It's not because they see improvement in the country's prospects itself. Well, on that note, Mr. Mundra, what is the Reserve Bank's own estimate of the capital needs over the next 3 years for PSU banks?
As we indicated earlier, the calculation which was done over the entire cycle of Basel III implementation rather than the next 3 years, and at that point of time the estimation was something like 2,40,000 crore, and of course it was assuming a RWA growth of something like 15% per annum. Now, obviously, if the growth, the GDP growth were to pick up, and in translation, the credit growth can be much higher than what was estimated, and so the RWA growth. So requirement could be higher than that. But at the same time, with the improved performance, there can be a better retention. There can be a ability to raise some of the funds from other than government. So I think on balance, but still the broad estimation would remain around the same amount.
Okay, Mr. Mundra, hi, morning. The one question that's on top of market's mind right now is that two of our largest banks don't have a chairman right now, and we've gone through an earnings season where NPAs have seen a sharp increase. Do you get worried as RBI Deputy Governor, and what's your take on that, sir?
Certainly, I would be deeply worried, and let me correct few data points. These are not two but three banks. Three large banks are at this point of time are without, three large public sector banks,
yes,
which fall under the category of top 4. They are without a head. And leadership, we know in an organization, leadership matters for the policy direction. From Reserve Bank of India side also, these concerns are flagged to the Government of India and their capacity as owner to hasten the process and see that these appointments are done as early as possible.
Yeah. You have any indication when that might happen, sir?
I really won't be able to say. Of course, I think the work is on. This is what we understand, but it would be difficult for me to put a time frame to that.
Okay. Well, it might interest you to know that S&P now is also downgraded China's forecast and upgraded India, of course, more because of methodology, but goes on to add that India's star is rising. Mr. Mundra, on that note, it isn't only banks without chairman who have done badly. That has been unfortunate. But a bunch of other banks have also reported fairly sharp rise in NPLs. One of them actually a 28% rise in NPLs. What is the sense you're getting? Does this cycle continue for a goodish bit?
I think that, of course, in fact, the data point which has emerged in December were contrary to the expectation to some extent for us also. But if we look at it, I think there are some contributory factor which may be there. Of course, some of the leadership vacuum is one part which you have already indicated. The last cycle, post 2008-9, and then the first cycle of restructuring, maybe those restructuring were done with certain assumptions, and obviously the initial period of say the holiday etc. must have been factored around those kind of assumptions. Obviously they have not come true to the extent they were envisaged. That may be one of the contributory regions, and some of those sectors contribute to a large percentage of bank credit as well as the stressed asset in the banking system. I think another, when we go to say other than large corporate, but say medium enterprises, I think the receivable realization, which is a related cycle, that is affecting them. If I look at a segment like EPC contractors, where I think is a segment where both the things, number one, the lesser flow in order book, that's the one thing. The late realization of receivables which are already from the orders executed, as well as the large impounding of money by retention money, etc. So I think these are the various components which must have contributed to this kind of position.
Actually, some bankers told us that some of the payments are actually due even from the Government of India, and they blame the cut-in-plan expenses probably. What is your diagnosis? Is lower government spending on the plan account in some way responsible? Are you in dialogue with the government with respect to NPLs on this or any other issue?
No, as I did indicate, like when I talked about a segment as a EPC contractor, obviously this is one segment which would have the implication both in the government sector and non-government sector. But overall, slow realization of receivable. This is what I have indicated. It could be from either side. It could be from the corporate. It could also be from the government. It could be from the various state governments. So this is the overall the trend which is indicated there.
Okay. Mr. Mundra, on the thought of gross NPLs, we saw the likes of IOB, record a net loss of over 500 crores in the quarter. Do you think that it would be a feasible option to consider consolidation mergers within PSU banks more seriously now?
I think there are two things to it. Number one, any consolidation, merger, these are, I think, very long-term strategy. So I would not agree with the context of the question that if one quarter there is a higher slippage or there is a higher NPA, whether it triggers the consolidation. If these are the kind of trigger which can bring the consolidation, I would not think that it is a well thought move. So let us separate two issues. Okay. What has happened in the quarter may be a variety of factors, but the consolidation merger that would depend on many other say medium to long term measures. We also need to question what it should achieve. I mean to say a consolidation which is achieving a better geographical spread, or a consolidation which is bringing a better product range, then it can be a consolidation which is meaningful in the overall interest of the enterprise. But otherwise, if it is not achieving one of these purposes, then I mean to say what would be the outcome of that. So I think it needs to be thought in those contexts.
Okay. Mr. Mundra, in the context of some of these banks not getting capital, is that what the government or the dominant shareholder pointing to, that they would rather have them consolidate in some fashion? Did the government share with you what is the fate of the banks who have not got capital?
No, I say I won't know what is the thought process of government on this. At least I was not privy to any such discussion or those thought process. But as I indicated earlier in our discussion, while it would be a good idea to put some benchmark, after all the capital is a scarce resource and it cannot be just distributed as a dole. So it can be a good idea to put some efficiency benchmark for availing the capital. But as I mentioned, it cannot be an abrupt move, and particularly against the background which has been witnessed in last 2-3 years. So a roadmap can be laid for it. Another thought comes to me, as long as government remains the predominant owner, and as I understand, if the criteria which is given presently that all those who are below the median performance would not be entitled, that would mean that any given point of time, half of the entities would not be entitled for the capital. I think that is something which may not really work very efficiently, and even if this is to be done, it would have to be thought through maybe in some more objective manner.
Okay. Actually, the investors, markets are very keenly watching that bank capitalization figure, last year's, or rather current year's 12,000 crore figure being seen as woefully inadequate. There are numbers in the market which speak about 50,000 crores. Any comments on that, sir? Would you all also very keenly look forward in the RBI to a bigger number?
Of course, I mean, the adequacy of capitalization is certainly something which would be constantly under watch. And of course, as there is one is the direct allocation at this point of time, there could be dilution in some of the banks where this kind of margin is available. But we have, from Reserve Bank of India, we have done the assessment, we have realized this need, and quite some time back also we have suggested to the government to look at more than one measure to meet the capital requirement of public sector bank, and it can include either even the consider of issuance of DVR, that is the differential voting right share, or even diluting the stake, but remaining that golden share as we call it. So still you influence the policy direction of the enterprises or the holding company as is being discussed. So I think there are variety of options which are on table, and I'm sure it will be something which will continue to engage the attention and discussion.
Okay, Mr. Mundra, one final question from my side, and this is more from the market's point of view. Now it's looking increasingly likely that the US Fed won't hike rates till September of this year. Do you think that gives some more leeway to RBI to cut further rates in India sooner than expected?
I think monetary policy gets related to every event in the world. I think our the last policy pronouncement was quite clear, where the governor had articulated the monetary policy stance of Reserve Bank, and I would only say let's wait for the next monetary policy.
Sir, did I get you right on how
that
to
was the last question, no?
Last question from Anuj, sir. Okay. Well, when you spoke about bank capitalization, you said, is it Reserve Bank's view that government could think in terms of golden share or differentially valued shares, DVR shares? Is that what you all have advised? And as well,
these are the,
has that been your voice, your advice?
Yeah, these are the suggestions we have given from Reserve Bank of India, that these could be some of the, few of the options. Okay.
The government at the Jnana Sangam had also indicated that it is very seriously looking at the Nayak committee recommendations. Can you update us on what you have heard in terms of recasting the board of PSU Banks, appointment of chairman even from the private sector, and finally bringing the stake below 50%?
I have no greater update than what you have on all these areas. I only understand these all are the matters which are under active consideration, and some frameworks are being discussed.
Okay. All right. That is the final question, sir. Thank you very much for joining us and patiently answering so many questions.